Welcome back to Small Caps, ladies and gentlemen. My name's Kerry Stevenson, and back today, not back today, for the first time actually, I've got RLF AgTech. The Managing Director and CEO is Ken Hancock. The ASX code is RLF. Now, whether you believe it or not, there is an issue out there with food supply, food security, the way our crops are grown. And, I've spoken about this before in the past. The fact is that we are mineral deficient. I love what RLF are doing in terms of, the agricultural space and how they're using technology to increase crop yields on the ground, and also what they're doing in carbon capture, even though I don't fully understand it. But Ken's here going to open it all up for me. Ken, great to see you. Thanks for joining me on Small Caps today.
Hi, great, Kerry. Thanks for having me.
One of the things that you say is using less to produce more, which I love. But before we go into that, can you give our viewers just a brief overview, because you only listed in April of this year, so you're the new kid on the block. You raised 8.5 mil. Give us the brief overview of who are RLF AgTech.
Yeah, thanks, Kerry. So at RLF AgTech, we develop crop nutrition technologies to increase crop yields in agriculture. So about half of our business is in those enormous markets of wheat, rice, and corn around the world. And also about the balance of our business is in crops like horticulture, so fruits and vegetables, and also cotton crops. And what we're looking to do is produce those next increases in yield across all these different crop types, and target yield increases in the range of 10 to 30%, which is really significant in agriculture and goes towards helping us solve, the global food crisis.
There is but I was right when I said in that intro, wasn't I, Ken, that there is, because people talk about it, and then other people go, there's no food crisis. I can go to Woolies and pick up what I want whenever I want. But are you seeing that there's a food crisis, so that what you're doing is going to be vital ongoing?
Yeah, well, we certainly know that we need 70% more food over the next 3 decades. So we've only got a limited number of hectares to produce that from. So we're not getting a lot more arable land around the world. In fact, there's a lot of pressure on arable land. So fundamentally, we have to produce more crops and more yield from the areas that we have today. And that's really why our company exists, is to focus on building technologies for the market that can increase more yield, but do it more efficiently than what's been done in the past.
So what is this tech? Because I find it fascinating that when we're talking food and ag, you're talking technology. And I'm like, okay, what's the technology that RLF have?
Yeah, and this is really where ag's moving to. Like in terms of the way that we've grown crops for over 100 years, the fertilizer that we've been applying to the soil to grow crops really hasn't changed. I mean, in the 1880s we created superphosphate. In the 1940s we synthesized urea, which was an incredible thing to do, really, and today means that we are able to feed the world by having plenty of nitrogen. And then the other component is that in the 1940s, we started mining potassium in markets like Canada. Now, those 3 big macronutrients form the core of fertilizer inputs for cropping, but they're generally all applied through the soil, and the soil's very inefficient. We've reached a point now where we've really hit the limits of yield by just applying fertilizer through the soil. So the focus of RLF and our technologies is to bypass the soil and provide technology through the seed and the leaf of the plant, not only to provide nutrient or what you might term fertilizer, but also to act on the plant's natural physiology to accelerate the plant's growth, accelerate yield, and also build healthier soils as a byproduct of that process.
Healthier soils. I just want to ask you this question, Ken. Yeah. Is your tech, because you talked about fertilizer and the like, and that yours is different, one of the challenges that I've had in my lifetime, and I keep hearing about, is that we're mineral deficient because our soils are mineral deficient. Is that true? Does whatever you're doing help rebalance that?
Sure. So, yeah, one of our focuses is balanced nutrition in cropping. So rather than only focusing on those three big macronutrients, critical to cropping are micronutrients, things like zinc, copper, manganese, boron, molybdenum. These are all critical to not only yield, but also quality. Now, what we're seeing in a number of markets, and we've just seen most recently in markets like Canada, and also the Netherlands and back from about 2016 in China, is that governments are starting to mandate reductions in granular fertilizer because we've been over-applying fertilizer to the soil, and it's creating a number of environmental issues that we have to address.
Okay.
So yeah, I think in the Netherlands, they're reducing nitrogen. Their target is to reduce nitrogen by 70%. Canada's talking about a 30% reduction in nitrogen application by 2030. Now, farmers are up in arms because as soon as we start reducing fertilizer inputs to the soil without having technology to bridge the gap, the most likely outcome is we lose yield and production. So what we aim to do, with our technology is not only normally straight off the bat, we can reduce soil applied fertilizer by around 20% and increase yield in that range of 10 to 30%. But we can do it in a way that fits the farmers' current systems, so they can apply our products through their current the current practices they use on farm. So it's a very convenient mix of using the latest in technology, but is complemented by the farmer, the current, the farmer's current practices. So that's why, we see for ourselves an enormous opportunity to move forward to in the global markets, because our technology is so adaptable on farm.
So the farmers don't need to go out and completely change the way they're doing things. Yours can, because Ken, recently, and I think I'm right in saying this, correct me if I'm wrong, or if you say, listen, Kerry, I don't want to comment on it, that's fine. Didn't Sri Lanka, the government, an advisor of the government turned around and said, right, you're going to stop all fertilizer and you're going to go completely organic. And it created massive problems within Sri Lanka, which is on today.
So, absolutely. Yeah, and we saw what a disaster that was. Now, in reality, actually, if we went organic around the planet, we would, about half the population couldn't be fed. So we would need to lose about half the global population to be able to feed as only organic. So, and in terms of the plant itself, again, and our view is that what we need to do is we need to take the mix of, the cost-effective inputs that the farmer has today, but make them more efficient. Make them use less of them, but grow more. And that's where our RLF technology fits in.
I kind of want to get into the company and, how much money you raise, where that funds are going, and what that looks like in terms of sales. Because I heard recently that Australia is only 1% of the market. So RLF is global. It's not necessarily fixated on Australia. I think it's important for people to understand that. But having just listed in April, I think you raised 8.5 mil. What have you done with the funds? Where's the shareholder? Where's the value going to come from going forward?
Yeah, that's right. Well, just in terms of the history of the company, it is an Australian company. We started here. All of our research and development, core research and development's done here in Australia. And then what we do is we take that R&D and we then move into the global markets to generate revenues. Yeah, Australia is only 1%, but it's been a very good market for us to test the products in, because it's a tough market. It's a very marginal market. We operate on very low rainfall in Australia. Margins for growers are relatively tight. So you need technology that can develop good returns on investment. Not often, in the independent trials that we've had done here in Australia with our products, we're generally seeing around a 5-to-1 return for the grower's investment in the product. So they're very profitable for the grower to use as well. Yeah. But as you mentioned, Australia is about 1% of the global market. So we have our eyes set on our technology. It can be utilised across the planet. We've had over 1,000 trials done with our products in very diverse countries and continents. So here in Australia, in the US, in China, in Southeast Asia. And what we've been able to determine from all that work is that we're able to get these very consistent results no matter where the applications are happening around the world. So we really want to, it's a story about an Australian company really taking Australian technology to the world. And that's quite a rare thing in the ag market. So, we're proud of that. But we see, enormous revenue opportunities in these international markets.
You're only just getting started. How big is the market globally, and how much do you? Are you? Because you listed, but there was a lot of work done beforehand.
Yeah.
How big's the market? How much of the market do you have to date?
Yeah.
And what's your I guess what's the word I'm looking for, Ken? What do you want? How much of the market do you want?
Well, we've got a couple of areas to our business. So one is the crop nutrition market, and that crop nutrition market, or say the traditional fertilizer market, is worth more than $300 billion a year globally. And what we aim to do is to convert about 20% of the growers' traditional spend to our products. So that's the crop nutrition side, but then we've got the carbon side of the business, and this is a really emerging part of our business in agriculture, in terms of we're able, through the application of our products, to help build soil carbon and help be part of that process of monetising, say here in Australia, Australian carbon credit units. And, we've done some calculations in the grain sector, and we believe over the next 25 years, there's, over $100 billion worth of revenue opportunity in that sector alone as well. So we are really talking about enormous markets. Again, both, that is on the carbon side, that's here in Australia, and Australia is about 1% of the global market. So yeah, it's really enormous opportunity.
You said that there were two sides to the business. There's really three, isn't there? On the tech side, you've got two products. Is that right? And then is the RLF carbon part, is that a separate division, or is it all intertwined?
Yeah, good question. So in terms of the on the crop nutrition side, we've got two distinct product categories where we use our plant proton delivery technology. One is our seed primers. Now, the seed treatment market is heading towards around a $13 billion, that's US, $13 billion value in terms of global seed treatments. So we've just released a new product called Veridium that we've filed a patent application for, which we think can have has enormous potential in that seed treatment market. Then we've got the foliar products that get sprayed onto the crop, and that's the biggest volume part of our business. And then we've got the carbon side of the business.
What's the focus on at the moment, Ken, in terms of growing revenue and shareholder value?
Yeah, so in terms of when we went to market, what we were really saying to our investors was that we've been able to demonstrate, this year we had record revenue of $10.7 million dollars. But again, in terms of the overall market, there's so much more opportunity. So we went to the market to raise capital to spend mainly on sales growth, revenue growth, so sales and distribution. So increasing our sales team. So this year alone, we're looking to put on, more than double our sales team to over 100 people. So we have very direct links between the number of salespeople we have and our revenue. Right. So we're really looking. One of our key focuses at the moment is bringing new people into our team to grow our base. And I mean, again, just in terms of that, how big the market is that we were talking about. If you look at Asia, a market like China has more than 310,000 fertilizer and chemical retailers. Even at our current revenue levels, we're dealing with about 400. So we've got enormous opportunity to expand into that market. Same in Southeast Asia. Same, all these issues around the requirement for fertilizer efficiency and more yield also exist in markets like the US and Canada. So we're doing work in those markets as well to be able to expand in the future.
Do you need to have, you mentioned the Chinese market, we all know that's huge, the Indian market's probably huge as well.
Yeah, sure.
Do you need to have sort of like a joint venture partner to get into the Chinese market, or do you just say, look, we got some salespeople, this is Australian ag tech, which is second to none. Do you just bring in salespeople into those markets?
Yeah, so in a market like China, we don't have any joint venture partners. We operate as a wholly owned foreign enterprise in the terminology, and have done for a number of years. We've got our own manufacturing center there, which is really good because it means that we're not subject to any import tariffs or anything like that. We're very cost competitive in our production. We carry a very good GP because of that in our products, and we can also react quickly to the market in Asia. So not just China, but also importantly Southeast Asia. So for the work that we're doing in Thailand, Vietnam, Cambodia, and primarily those markets, but we've expanding into markets like Sri Lanka, looking at Indonesia, and those markets. So having a manufacturing base in Asia is, we see as a significant advantage over a number of our competitors, and allows us to be very responsive to the market and produce it, at the best possible prices as well.
And is this it's a product?
Yeah.
Very green? That's
right. Well, the thing with our products, and hopefully to give kind of the listeners an idea to understand how efficient they are. We just released an announcement last week about Veridium and increases in that's a seed treatment, so it gets applied to the seed and it's imbibed into the seed. Now on wheat we had a 7.2% yield increase. I think on corn we were 9.2%, and I think we were around 11.2% on rice.
Yes.
Now, to put that in perspective, to get that 11.2% increase represented another 1,200 kilograms of rice or grain per hectare. Now, to get that increase, they use just over 100 grams of Veridium. So we've taken 100 grams and we've turned it into over a ton. So, that's how powerful the technology is. And now when you look at our technology that's sprayed onto the crop, again, where granular fertilizers in the soil are applied at 100, 200, 300 kilograms a hectare, we're generally using 1 litre or 2 litres of our product, so 1 to 2 kilos, to get that next 10 to 30% yield increase. So it's super efficient. That means that the cost of application are low, the costs of freight are low compared to traditional fertilizers as well.
They must be biting your hands off. I mean, there'd be no problem selling this, would there, Ken?
Well, right now we're very busy in our production facilities and getting product to market. But it is, our business is about such an enormous market. It's about education of the market, promotion, and that's why we went to market to raise capital, so we could accelerate the business. And pre-COVID, our business was growing at a 60% CAGR. During the COVID years, a couple of years during COVID, we had things were more difficult in those markets because of the way that products are marketed in the channel. However, as the market started to turn, and we've certainly seen the improvement now coming out of COVID, as mentioned, revenues are up 26%, and we're investing in that sales and distribution to keep our growth going.
We've got inflation. I would have thought that if you've got a product that helps increase crop yields, the farmers would be biting your hands off.
Yeah, absolutely. There's but not just from the yield perspective, farmers really have to start addressing costs. We've seen something in the last over the last year, and a lot of people would have seen it in the media that fertilizer prices have more than doubled.
Yeah.
If you take something like urea here in Australia, urea was, historically for many years, it's been $500 to $550 per tonne. Today, growers are signing up at, $1,200, $1,250. So fertilizer costs now are really going to come into play as well. Farmers, we've been at the forefront of the industry in terms of developing technology that's more efficient. And that's, and farmers have used that technology to increase yield. But I think now they're not only going to use it to increase yield, they're really going to use it to reduce costs. Because when they can save 20% of those granular inputs that are increasing, that have been increasing rapidly by using our technology, there's a double benefit. So there's the fertilizer saving benefit, plus there's the yield benefit. So it becomes very profitable.
They still need the fertilizer, don't they?
They still need the fertilizer. Yeah, we want them to use about 80% of the levels that they use today, and then use our technology to get that next 10 to 30% yield increase. And in fact, that cutback, that 20% cutback, actually pays for our products. So it makes a lot of sense. Yeah. It's just about building more efficiency into their system.
Who else? I've got to ask this question. Who's close to what you're doing? Got any competitors out there, Ken?
So we've been, I guess, one of the reasons that we were able to get started in markets like Asia was because we genuinely had different technology. I don't have a lot of competitors from Australia in Asia or markets like China, because those markets are already saturated with products from around the world. So we really needed to have different technology that outperformed other product, and our plant proton delivery technology gave us that. There's certainly a range of different companies that work in the micronutrient space, but I think where we really have some uniqueness, if you like, is that not only are we looking at the nutrient component of the business, but certainly our technology delivers those benefits of fertilizer reduction, increases in yield, and also increases in soil carbon. So this is, somewhat different to most standard, companies that are dealing in fertilizer, whether macronutrients or micronutrients.
You said earlier revenues for this year were 10.7 million, I think it was.
That's right.
What's your forecast going forward?
So whilst we're not providing forecasts, I think, in terms of our growth trajectory, we really going to market, we're really wanting to get back to where we were pre-COVID in terms of our trajectory. But I think, for us, our revenue is very much linked to the salespeople we have on the ground. So I was mentioning we're more than doubling our sales team this year. So that will have significant benefit in the forward years. And as you can appreciate too, whilst we get some immediate benefit out of bringing new salespeople on, it's really in year 2 and 3 that we start to really see the increases. So for us to, after listing and now that, having $8 million in the bank at June 30, we're well capitalised to really invest in that team and grow our distribution team for the future.
And revenue is coming in, which I love. The revenue is coming in. You're increasing the sales team. We're running out of time, Ken. It's been an absolute pleasure having you on. Fascinating stuff. And I love seeing Australian technology being taken out to the rest of the world and also helping us increase those yields because goodness knows, as you said, if we went 100% organic, half the people wouldn't be fed. And that is scary stuff. So really happy with the tech that you're doing. Give us 3 reasons. This is a wonderful community out there that love to hear what's happening out there and new tech and especially new Australian tech. Give me 3 reasons why we should sit up and take notice of RLF right now.
Yeah, well, in terms of our business, we're operating in an enormous market, $300 billion plus market a year. We've got solid foundations and we've got a solid pathway through to growing the business from our $10.7 million in revenue today, to a much larger position in the future. So I think the market is one. Number 2 is really the carbon side of the business. We're at the forefront of the carbon business in Australia. This really was, in terms of when we went to IPO, we had notified investors that we'd established RLF Carbon and signed an LOI with the Commonwealth Bank in that area to look at the development of that business. However, there's, we see a lot of opportunity to partake in that, what we believe will be over $100 billion market over the next 25 years. And in terms of the third component for us, we're really looking at how we, in terms of our current valuation, we believe we're really well valued. We did a comparison against peers that's available online now. We've got a market cap today of 30 million. If we get the the kind of our revenue to market cap multiple reaches the average of our peers, our valuation should be more like $90 to $100 million. So we think there's enormous opportunity there too.
A little bit of a disconnect there, but look, so one thing, Ken, we didn't go fully into the carbon market. We'll do that next time. It's one of those ones that you need a whole 20 minutes on the carbon market on its own. But you've got RLF Carbon, you've got RLF AgTech. It's helping with the food energy crisis globally. Thanks so much for joining me on Small Caps today. Wish you all the best and talk to you soon.
Thanks, Gary. Appreciate you having me.